All right, John, I am ready for you now. So, first of all, thank you for taking the time to give me the opportunity to present to you what lending with us would look like. As I told you when we first met, we are a full time real estate investment company. The company is Domus. Domus, just so you know, Domus is the Latin word for home. We do design, build, and real estate all combined in one. This image here on this front of the presentation is our flip that we did in Joshua Tree. I would say one of my favorite projects that we've done to date. So anyway, let's get right into it. It's just a quick presentation taking you through the steps of what that would look like, what our company looks like, what my background is. So here we go. Before we actually get started, though, I do have to just read off this disclaimer. I know we're both adults here, but this is necessary. So the following information is for educational purposes only. We will not be providing financial, legal, or professional advice. We will introduce you to strategies that we use, and they may or may not apply to your personal financial situation. Always, always, always speak to your team of professionals before applying any of the strategies that we talk about or that we learn about today. So who am I? My name is George Manjarres. I am a full-time real estate investor. My formal educational background is in architecture. I got my bachelor's of architecture back in 2009. I am also a general contractor, also a California realtor. I've had numerous years not only in the architecture field, but also in planning departments. And then after I did a few years in that field, I jumped into sales, where I did about 11 and a half years in both sales and people and project management. We've completed multiple six-figure flips as a business, as well as wholesale transactions all over the country. What are our business goals? So our business goals, our immediate business goals, are to expand our short-term rental portfolio. We do have Airbnb. We would like to get some more, get some more monthly cash flow going that way. We are also looking to acquire long-term rentals so that the income is a bit more passive, and we get all the benefits of owning long-term rentals, such as appreciation, depreciation, and all the tax benefits that come along with it. We are looking also to raise an additional $5 million in private capital. So if you've got friends, family, anyone that wants to join in on the fun, send them our way. We will have a chat. We will present them with the same opportunities as you. We are looking at design and build affordable housing, as well as design and build new custom homes. There is a huge demand for living spaces for homes. We are very, very much in a deficit as far as homes are concerned, so we do wish to expand on that. And then we are also looking to hire an acquisitions manager for the wholesale side of our business. So why real estate? Why do we love real estate, right? Why should you invest in real estate? In our opinion, and in actually a lot of other people's opinions, real estate has really been the greatest hedge against inflation over time, right? Inflation over the last couple of years has gone kind of crazy, all the way up to almost 8% at some points. And so if you want to hedge against inflation, you essentially have to have your money invested somewhere where you're going to get a higher return than the rate of inflation, right? The cost or the value of the dollar has actually gone down significantly, almost exponentially, over the last century. And unless we go back to the gold standard, where the money is backed by actual physical gold, I don't see that value of the US dollar going back up. For us, it's really a matter of risk versus control and managing the two. And so real estate offers us the greatest amount of control over everything that we do. And how is this? Well, because of how we purchase properties, because of how we underwrite properties, because of how we remodel properties, we control what goes in, right? So we control the price that we decide to buy it at. We control the finishes, the quality of work that goes into it. And because we control what goes into every project, we also control what comes out, right? So because we do the underwriting, we know more or less what we can sell it for, right? So what we can get out of it. And so the more control that we have in any specific scenario, then the lower the risk that we are exposed to. And why private money? Why do we need private money? Why do we like private money? Why do we prefer private money? And so private money gives us always a competitive advantage. We are always able to make a competitive cash offer. You know, we can go get hard money. Typically, hard money has a bunch of prerequisites that they require investors to meet. They require inspections, sometimes appraisals. And so going with private money, not having to pay fees, not having to jump through all these hoops, will give us a competitive advantage whenever making a competitive cash offer to potential sellers. Private money will offer or will allow us to offer a quick close. So from the point that we send in the contract to the point that we close escrow, we can shorten that period of time if we use private money versus hard money, where most hard money lenders that we like to use have a bit of a longer approval process. And because we are using private money, not having to go get a loan through a bank or through an institutional hard money lender, we can buy properties that to these institutional lenders or to these hard money lenders might not meet their minimum requirements. And these are what we call non-conforming properties, right? So a property that maybe has way too much damage for the risk tolerance or for the liking of a hard money lender, we can decide whether we want to take that risk, that managed risk, and buy the property. And private money really also allows us to scale, right? We use our own money on projects all the time, but really using our own money, we only have so much of our own money. And so bringing in private lenders like yourself will allow us to do multiple projects at one time and really allow us to scale the business. And at the end of it all, using private money benefits individuals, right? It benefits you as an individual. It benefits us as both a company and me and my staff as individuals. The banks, institutions, they already make a ton of money, right? I don't want to give them more if I don't have to. Lender benefits, benefits to you as a lender. What are they? One of the benefits is that your investment will be collateralized. And so what does that mean? That means that your money is not just being lent to George on a piece of paper, right? On a good word, on a promise. It is actually being lent on an asset. And that asset, that property that we purchase with the loan that we get from you, that asset is the collateral. So your investment will always be collateralized. It will always be tied to an asset. 99% of the time, we do buy those assets, that collateral, below market value. Sometimes, depending on the market, depending on the area, we will buy at 20 to 30% below market value. Most of the time, as much as we can, we like to buy properties that are 30, 40, 50% below market value. And because we're able to buy so low and we have access to properties that are priced way below market value, both us as well as you will have a higher return on investment when compared to like other investment avenues like the stock market or mutual funds or whatever else it is that you like to invest in. And you get a fixed rate of return on your money, right? So for example, we can offer, let's say, a 10% fixed rate of annualized return, right? So that means that broken down into a monthly percentage, you will get the same rate of return every single month for as long as the term that we have your money out for, right? If you compare that to the stock market, you may get 6% rate of return one month. The next month, you may get a 10% rate of return. And then the following month, you might get a 4% rate of return. It's not a fixed rate of return, and it's not necessarily favorable to you and to your money. We create, for the most part, short-term notes. All of our rehab projects typically take anywhere from 2 months all the way up to 9 months, depending on the area, depending on the work that needs to be done, depending if we're doing a large addition or working on an ADU value add. So short-term notes are always what we try to create. If we do buy long-term holds, then those can be 12, 18, 24 month long terms. And in the end, the benefits that we get as a company, benefits that you get as a lender, is that we establish and we like to hold long-term relationships, right? So every single person that we bring on board as a lender, we appreciate them. We like to build up on these relationships and not just see you really as a dollar symbol, right? We like to see you as a partner of our company and our business. Now, what kind of security can we offer and do we offer to all of our lenders? And there are 3 ways that we offer security. You will be protected. Your investment will be protected. It will be secured and it will be insured. So we protect your investment with a promissory note. The promissory note is just how it sounds. It's a promise. It's a document that promises, that shows how we will pay you back, how much we owe you, how we will pay you back, the terms of repayment. Every single investment is secured with a recorded mortgage, right? So you are primary holder of that mortgage. It goes through escrow. It goes through a title company. Title company then records everything with the local county. And then every single investment, every property that we purchase is insured. You will be protected. Your investment will be protected with an insurance certificate, where we essentially get a hazard policy for the rehab, and you will be named as the primary loss payee. Funding options. Where can you get your money from to lend to Domus, to the company, to the projects? One of them is a HELOC, right? So all of these options that I'm about to discuss with you and mention to you, the common thread here is essentially arbitrage, right? So arbitrage is getting something at one rate and then taking that, whatever that is, and being able to sell it, in this case, loan it out at a higher rate and making a profit on that difference, right? That's the arbitrage. So a HELOC, if you have equity in your home, you can take out a HELOC depending on where the rates are. Let's say it's at 4 or 5%. You can take out a HELOC for however much money you want to lend to us. And then let's say it's at 4 or 5%. You lend it to us. We give you a rate of return of 10 to 12%. So you're essentially making a difference of 6 to 8% on your money. Retirement accounts. If you have money sitting in a 401k, in an IRA, a self-directed IRA, there are ways that you can essentially take that money, loan it to a company. Again, as long as the rate, the interest rate that you have to pay on that loan is a lot less or significantly less than the rate of return that we will be paying you. So if the numbers all make sense, that might be a good option. Lines of credit. If you have great credit, for example, I have great credit. I have lines of credit and access to lines of credit, sometimes $50,000, $100,000 that I can tap into. Sometimes introductory rates are extremely low, 0%, 2%, 3%. And again, if you have an interest rate on that line of credit that is significantly lower than the 10 or 12% rate that we offer you as a return, then that might be a good place to tap into funds. Same thing, high limit credit cards, as long as your interest rate is low, as for example, on an introductory rate, when you get a new credit card, that would also be a good option. Life insurance. If you have like a cash policy or a type of insurance where you have access to the funds and you can borrow against that life insurance, that might be a good option for you. Stocks, bonds, and other traditional investment avenues, same thing. You can borrow against these. Sometimes it might make sense to take it out of the stock market. If the stock market is not performing well, let us borrow it. We put it to work. We pay you your return, pay you all that money back. You can put it back to the stocks, bonds, or whatever else it is that you like to invest in. And another one is just cash in the bank, right? If you're sitting on a big pile of cash and you're not necessarily doing anything with it, then that might be, or that will be a good option for you, because essentially money sitting in the bank is essentially you're losing money, right? You're losing money every single day if you're not putting it to use. Our team, it's not just myself, it's not just my wife, not just our staff, but we do have other partners, right? Whenever we need them, we have attorneys, we have CPAs. I am a realtor, but we do have other realtors that we like to partner up with. I am a contractor. We do have other contractors and subcontractors that we like to work with. Designers, again, I am a designer. We do have designers in different areas of expertise that we either partner up with or consult with. Stagers, inspectors, insurance agents. We have appraisers. We have lenders that we work with, mortgage brokers. And then we also have coaches and mentors, right? We are firm believers that we should always be learning. So whenever we come across something that we might not necessarily know how to work, or how to an opportunity that we don't know how to take on and we might need someone's help, we reach out to our team and our partners. So what does a private money lender, what do the logistics look like, right? And I'll walk you through a quick workflow here. Step one, we've already done. First, when I met, doing it a second time here, building rapport, right? This is where we get to know each other. We get to know you as an individual, and you get to know us both as the company and me as an individual, right? And so as we continue to build rapport and get to know each other, if we decide to or if we come to the conclusion that we are the right fit for each other, then we can move forward, right? We move forward with a commitment. We essentially like to get a soft commitment of the amount of funds that you have available to invest, right? So that when the opportunity does present itself, then we can reach out. We know what private money partners to reach out to. So we get the soft commitment. We go out, we look for deals. We get deals sent to us every single day, multiple times a day. If we like a deal, we underwrite it. We run our numbers, double, triple check, make sure that it is a good deal. If we do like the numbers, we'll make an offer. If the offer gets accepted, then we move on to step number 4. And this is where we reach out to all of our potential private money partners, people that we have relationships with, people that we've had this conversation with already. We reach out to them and see which one is the best fit for that specific project, right? We identify that private money partner, and then we work on the loan docs. So the loan docs get written up by escrow and title company. We finalize the loan docs. We come to an agreement on the loan terms. And then once that all gets completed and we're ready to close, you as a private money lender will essentially wire the funds to the escrow company. The funds do not come to me. They never come to me. They should never come to an individual. They go through the escrow company. That way everything gets recorded. And then once the funds are there and we're ready to close on the distressed property, we close on the distressed property. As soon as we close escrow, we will begin the renovation, right? We then complete the renovation after a month, 2 months, 3 months, depending on how long the project is. Once that renovation is completed, either myself as the agent or one of our partner realtors will list that property. We will get offers in, we will accept an offer, and then we will close on the renovated property with the end buyer, right? Once that end purchase is completed, then the money comes back from that borrower or their bank, comes back to us through the escrow company. Escrow then distributes to you the amount you lent, plus the whatever interest we promised to pay you, and then everything else gets dispersed to whoever is the beneficiary. So you get your profit, we get our profits. Escrow company, title companies also get their payments. And last but not least, we do it all over again, and then again, and then again, and however many times we wish to continue the process. So that is it. Oh, no, that's not it. SEC guidelines. Things you should know, both about us and other companies that you might be lending money to. We do not and we cannot guarantee projected returns, right? So we offer an annualized return. We do our underwriting. We look at our numbers. We double check, triple check all of our numbers. We always have projected returns. They are never, ever, ever guaranteed returns, right? If anyone tells you that they can 100% guarantee a return, they are lying. They just want you to invest your money. We cannot guarantee. No one can, right? No one knows what's going to happen with the economy, with a project, with anything. So we do not guarantee our returns ever. There will always be some kind of risk involved, right? We do not pool investor funds. So unless we are explicitly raising money for like a big multifamily project, if we're just doing a single family house, a duplex, a triplex, a quadplex, whatever it is, we will not pool investor funds. We will go through one investor and take on a project that way. If you have any other questions regarding the SEC, which is the Securities and Exchange Commission, you can always also visit their website and take a look at there. And that is it for me. And if you have any questions, I'd be more than glad to answer.